The ASX 200 ended in the red today with a loss of 18 points, or just under 1/3%. But notwithstanding the weakness, what stood out was the improvements that we saw for the materials or mining sector in particular. And this turns around some important initiatives that have been announced in the last 24 hours on both sides of the Pacific. The Chinese administration has announced a number of stimulus measures that are aimed at supporting different parts of their economy. And in the United States, the Trump administration has put forward a $12 billion package aimed at supporting the agricultural sector. So no prizes for guessing that this all ties in with the latest developments in relation to tariffs and trade. But the bottom line is that the commodity-facing sector's got a bit of a lift on the back of this news. So today in local trade, BHP was one of the better performers amongst the bulk miners. It was up by around 2%. Energy stocks in broad terms were higher today, and this turned around US oil inventories experiencing a bigger than expected fall over the course of the last week. Banks were a weak spot on the market today. Westpac was down by around 1%, as were healthcare stocks. CSL shares were down by around 1.7%. As far as company news is concerned, CSR announced that it has had a number of expressions of interest in relation to their window business called Viridian, and the market was excited by this prospect. In a falling market, the stock was up by around 2%. Wattle Healthcare is a dairy company. They indicated that they have been granted approval to market a product in China, and let's hope that that will pave the way for further approvals, including their infant formula product. The shares were up by 7% today. Elsewhere, Medical Developments is an organisation that markets a non-opioid drug called Penthrox. They've got approval to market this through numerous jurisdictions in the world, and they've been waiting on approval in the US, but the Food and Drug Administration has put up a roadblock, and the stock has fallen by a sizable 18% today as a result. CIMIC continues to get a tailwind from last week's news, better earnings and an upgrade to their dividend. The stock was up by 4% today. Weaker than expected inflation numbers for the June quarter have put some downward pressure on the Aussie dollar, which is trading just below 74 US cents.